pleased to meet together with the next roundtable for Paris Mat, Evolution on the Market and Insurance in Africa, CIMA Dynamics. There is going to be an online opinion poll. You can send your answers to the chat if you click on the answer. Are these constraints or opportunities? And you have 30 seconds to answer the question. And then, of course, we'll talk about the results of the opinion poll together with our audiences. I'd like to welcome Serge Azebazé. You are Managing Director of Activa Insurance, Europe and Globus Network. Claire Harmonic, Head of Marine Department, Allianz Africa, Paris. And Benjamin Boudot-Rimbaud, who's General Director, Filet à Afrique. Mr. Azebazé, you have the floor. Thank you very much. Good morning to you all. I'd like to start by talking about this very interesting topic, namely Africa. We're going to be broaching a topic which has been the subject of lengthy discussions on the market. In this regard, I would like, first of all, to talk quite quickly about the economic situation, the market in the CIMA area when it comes to insurance. And then we'll talk with Benjamin and Claire, and then I'll take the floor again to draw some conclusions. So to begin, I'd like to talk about four main points. I'll give you a quick introduction. I'll give you some figures pertaining to the insurance market in the CIMA area. Then I'll focus on the transport branch. That's our basic activity. And I'll wind up by talking about this hotly discussed topic, regulatory changes on the market. I'm Managing Director of Activa Europe. It's an offshoot of the Activa Insurance Group in Cameroon, which is currently present in 7 countries in Africa: Cameroon, Ghana, Guinea, Conakry, Côte d'Ivoire, Democratic Republic of Congo. And in Paris, I work with international brokers and risk managers. As CEO of the Globus Network, Globus is the non-integrated network of insurance companies based in Africa, present in 49 countries. Africa, that's 51 countries. So we have over $65 million in premiums issued, about 3,000 policies. Having said this, let's get back to the nitty-gritty and talk about the market in the CIMA area, the economies in this area. When it comes to population, in 2019, Africa had 1.308 billion inhabitants. It's the second most populated continent after Africa. According to UN studies, by 2050, Africa will comprise 2.4 billion inhabitants versus 10 billion inhabitants in the world at large. People say that in 2050, 1 out of 4 people will live in sub-Saharan Africa, whereas it was 1 out of 13 in 1960. You can see that there's a huge demographic boom in Africa. Now, what about forecasts for growth? 2021, according to forecasts, there will be a growth which is quite strong, 3.4% in 2021, as opposed to minus 2.1% in 2020. 2020, this was due to the crisis, the health crisis, COVID. When I say minus 2.1%, that is not much compared with the impact of COVID in other parts of the world. In terms of COVID, Africa did not comply with the forecasts of the international system, according to which COVID would have a very, very harmful impact on the continent. In October 2020, it was noted that there were only 4.2% cases of contamination in Africa. Why has Africa held up so well? Well, that's another discussion. Let's talk about the CEMA area. CEMA is the Inter-African Conference of Insurance Markets, 14 African states which have the same regulations when it comes to insurance. In this area, the penetration rate of insurance is about 1%. 1%, that shows there's huge scope for development in this continent, in this part of Africa at least. The economy, of course, focuses a lot on raw materials, oil and gas in particular. Also, in this area, there's huge volatility in exchange reserves, and also there's been a crisis in hard currency. All this was caused by a hardening in international money transfers, harder controls. Now some key figures pertaining to the CEMA insurance market. Basically, one should remember that in the area, the figures here are the figures provided by FANAF. In 2019, the 12 CEMA countries collected 1,930.6 million euros in premiums that year. And on the table, you have the volume of premiums issued by each country. In this area, basically, one should remember that 65% of the total premium market concerns non-life insurance. And in this segment, it's important to know that there are 5 countries out of the 14 which account for about 75% of the non-life premiums: Senegal, Côte d'Ivoire, Cameroon, Gabon, and Congo-Brazzaville. Transport represents 10% of the total volume of premiums in the non-life segment in the CEMA area. Now, what about transport? Let's focus on that. Total premiums in 2019, 125 million euros approximately, and marine is 62%, air 17%, and other forms of transport 21%. It's important to underscore this. These figures are marginal compared with the volume of goods which are imported or exported to or from Africa. So, having given you this background information and the figures for the market, I'd now like to focus more on the topic of a lot of debate, namely regulatory changes in the CEMA area. Now, are these constraints or opportunities? Before answering that question, we have to look at the context. What are we talking about? We're talking basically about the whole range of regulations changing in Africa. 5 are quite important. They are quite significant, and they have an impact on our business. First of all, the increase in the company capital of companies in the CEMA area. The payment of premiums, that's all those who work on the area know about Article 13 of the CEMA Code, which says that payment of the premium has to be in the head office of the insurer, etc. Third point, Article 308, that basically concerns obligatory legal sales. This article says that a maximum of 50% of premiums can be sold abroad unless the agreement of the supervisory ministry has been obtained. and 100% retention rate for goods transported. And then in terms of brokerage has to be paid locally, brokers located locally, and that also is a bit problematical for international partners. Fifth point, control by central banks. Because there isn't much hard currency, there's increasingly harsh control by central banks with strong demands when it comes to international transfers. There are two areas in CIMA, two monetary zones. You have the CIMAC zone, which is Central Africa, roughly speaking, and the UEMOA area, which is West Africa. So in practice, rules in CIMAC may be very rigid and more flexible in the UEMOA area. Now I'd like to focus on two regulatory points which are important. The first, as I said earlier on, consisted in increasing the capital of companies. That's very important. Why? There were quite a lot of reforms since 1992. Well, 1992 is when CIMA was created. Since 1992, the social capital of insurance companies in the area went from 2 to 10. It was multiplied by 10. For example, $1 million in 92, $10 billion following the latest reform. This reform comprised two stages. First of all, companies had to have a capital that amounted to about $5.5 billion by 2019. And then there was a second stage, a second increase, $9.2 billion, or $9.2 million by April 2021. That was extended to 2024 for non-life companies, and it was suspended for life companies. Why? Owing to the COVID-19 crisis. Now, what's the purpose of this reform? CIMA regulators wanted to strengthen the financial solidity and solvency of all the companies in this market. And also, the idea was to improve efficiency of and the services offered by insurance companies. In fact, the idea was to have companies in the area which would be stronger and more resilient, reinforcing their capital so that they could insure big risks, major risks, and better collect premiums on the market too. That is the constraint side for companies in the CIMA area. Second point, second reform, I mentioned it earlier on, it concerns obligatory local sales. Now, why were these reforms enacted? It's, on the one hand, companies are asked to significantly increase their capital, and on the other hand, to give life to these companies and then life to the market. The idea was to increase the amount of premiums retained in the area. The aim is to create a more robust market in the CIMA area. Now, there were two stages in this reform. First of all, up to 1st January 2020, and then up to 1st January 2021. Companies in the CIMA area have to seek a RE, which is a company in the CIMA area First of all, they have to see 2.25%, then 20% on treaties, 10% on optionals, except for oil, gas, and aviation. Once again, as I said earlier on, the idea is to create on the market, to reinforce reinsurance on the market and lend greater solidity, increase the turnover of reinsurance companies which invest in the CEMA area. That's the goal sought by increasing equity and making things more professional on the market, fostering thereby greater credibility for companies in the area vis-à-vis the international market. So that, in a nutshell, is how I would express the developments on the market. And now we can see whether these changes are constraints or opportunities. I'll take the floor later after giving the floor to the next speaker.
Yes, the results of the survey are in. I'll communicate them. There's first of all an opportunity with 45% of constraints. So are you surprised by this result? Well, Claire first. Well, not at all. Not at all. I'm even a bit pleasantly surprised, but that proves that good education was conducted about this new regulation, and it's a good thing. Well, very good. I'll tell you what I think at the end in your closing comments. Okay. So now we'll give the floor to Benjamin Bouteau-Rimbaud, who is on a video link with us. Thank you, Serge, for giving me the floor. I'm with you today from Abidjan. I think that you're going to send a bit more sun for us here with the rainy season. But to answer Serge's question regarding the presentation, how are brokers adjusting to changes in the CEMA area? For us, that has to be compared with the two main articles of the CEMA Code. Article 13 about pay cash before cover. So premiums are paid at the beginning of the risk-taking, even before the risk is taken. And Article 308, which keeps part of the risks on the African continent, in particular the 14 countries of the CEMA area. Via these two articles, for us as brokers, of course, it's about the financial security of insurance companies. Since insurance companies now have the requisite cash, that way they can immediately face in case the payment of claims in case of claims. But now the role of the broker, and we'll explain that in more detail later, is to do this work, to prime the system with the companies and to manage things locally in case of claims and to optimize claims management. Article 308 for us means that the branches as defined in the CEMA Code are regionalized so that insurance companies can keep part or whole of a risk or all of a risk on the territory of the country involved. Of course, this aspect is going to contribute and is still contributing now to strengthening insurance companies by taking on more and more risk within the local scope that they're managing. But of course, the more the countries are going to grow, then of course, the more the capacities will need to be big. And so gradually, they're going to have more and more capabilities. So for us, insurance in African countries, especially in the CEMA area, is going to grow wonderfully. This growth should happen with brokers and also in particular specialist brokers. So the second question, Serge, that you asked us, how can you make sure that you carry on supporting your clients in this regional context? What you need to keep in mind is that the context of the CEMA area is an opportunity for us. An opportunity on two counts. The first level, internationally speaking, especially for reinsurance, as you pointed it out in your markets, increased a lot lately, which is not always the case for the African scope, especially insurance companies with their own capabilities have not always revised their price conditions upwards. The second aspect is that the administrative regional specificities in CIMA have led a number of risk managers to revise underwriting policies that used to be integrated into international programs, and gradually these risk managers or major industrial companies have understood that it became relevant to regionalize certain programs. Why regionalize? Well, as I explained, reinsurance is less expensive in the area, and local specifics could also crop up again, and so legislation allowed us to readjust certain programs when it was necessary. The quality of insurance, but also of reinsurance, be it local via national reinsurance companies, or regional reinsurance, or potentially international reinsurance when it's necessary, help strengthen these programs that we are putting in place. And the role of our firm, which is a multi-specialist firm in transport, industrial risk, or the health aspect, enables us to have that field knowledge and to adjust programs for our clients if necessary. For the third question, Serge, the recent installation of Filiale Africa, isn't that proof that the CIMA area is still a land of opportunity? Well, there are several aspects to that. First of all, on the African scope, especially the CIMA area, if you look at the figures from a macro level, the penetration level of insurance is less than 1%, 0.7 for non-life, 0.3, 0.4% for life insurance, whereas it's 3% in the English-speaking part. So there's a great area of opportunity for the insurance market when you're looking at the figures with a macro lens. But now very concretely, very down-to-earth view with the field routes that we have. We are a multi-specialist broker, as I was saying a minute ago. We have 3 key sectors where we're involved in the African scope. Filiale, with its roots, mostly with Filiale Maritime, are not new. We've had roots in Africa for decades now, several decades. We had a subsidiary, Filiale Côte d'Ivoire, that was largely involved with our importing or exporting clients, and now we think that via the many building projects and the organization of some regional projects, international donors also, the value added of a broker. Well, we have a role to play in African economies, in African insurance. And so precisely this regional hub allows us to focus technical skills, operational skills for our specialists and engineers in the CIMA area, and they are harnessed for our network. Talking about the network via these 2 hats that I'm wearing as the head of Filiale Africa and also as the head of the Brokers Link network throughout Africa, in just 12 months we've established the premier brokers network in Africa, So operationally, our local brokers deliver quality service to the clients, day-to-day servicing, and so corporate business or regional cases where you need specialists, that's the role that is played by Filiera Africa on the African continent. So for us, this recent establishment helps us provide our customers with an in-depth analysis of their needs. We can select guarantees, we can select solvent, serious, local, regional, or international insurance companies, and then we can be involved in placement of reassurance when necessary in order to guarantee end-to-end service in the setup of the contract, but we can also provide support to our customers in claims management with insurance companies. Because of CIMA legislation, insurance companies are getting stronger and stronger, and I think it's a good thing that African insurance companies are forging ahead. They're strengthening their financial capabilities via capital increases, as you explained earlier. That is going to clean things up, and that's going to be beneficial for clients and beneficial for the whole insurance sector. Thank you for these comments. Well, thank you, Benjamin, for your comments. I'm also going to now give the floor to Claire, who's going to share with us the perspective of an international insurer present on the African continent for at least 50 years now. A bit more than a century. We're an old lady now. Okay, so Claire, could you share with us your perspective regarding regulatory development? You've seen that with your personal experience in Africa for years. And could you explain how a group like Allianz is adjusting to these changes? And a last aspect to this question, how is the fact that Allianz in the CIMA area in particular exited some countries, you left certain countries? Is it because of these constraints, especially the part regarding capital, minimum capital increases for companies? Well, regarding the latest regulatory changes, indeed, Benjamin was talking about Articles 13 and 308. Article 13 about pay cash before cover, and Article 308, that's on everybody's minds, reinsurance. Article 13 for us was a non-event. It was a non-event because in the Allianz Group we already had very strict governance rules regarding the cashing in of premiums, hunting for overdue claims, and so that really didn't change things fundamentally. But now with Article 308 on reinsurance, what can we say? That was a sort of miniature revolution that I'll interpret as a very beneficial thing. Before Article 308, and to talk about earlier matters without talking about archaeological matters, fronting was totally voluntary. What you could see in Africa is that whenever there was a relatively high risk, in the best cases there was a local contract that was issued, and then 100% of that would go outside, which was not adequate. African insurers couldn't be happy with that. So at first there was 25%. Everybody said, well, that's going to be horrible. No big company is going to get insurance. And so it didn't really hurt because people still insured themselves in the same way. Then there was the second, more recent change, which gave the possibility of reassurance to 50% for corporates and 100% for so-called individual risks. And cargo insurance is amongst those coverages, aviation, hose, space, and rail are leading risks, and so they're not considered in that scope, as you mentioned. So we adjusted to that. That really revolutionized things. We revised treaties for some of our subsidiaries so that we could have more capabilities. And also wanted to say a word about international programs and the fact that maybe that gave work both to us and our competitors. But it was also a very good thing because that forced everybody to scratch their heads and stop. I could see that almost on a daily basis. People in the Allianz Group, but not only, told us, well, we want to have an international program that was issued first in Australia, the US, or Japan, or whatever. So we'll have the same wording everywhere. That's good. Our insured, our brokers, everybody, we can explain what is covered, what isn't. But what I stand against is when we are told that in Japan or in the US, to come back to that, there's going to be a dollar limit of 100 million. And so you want to replicate this limitation everywhere. This is what was done in the past. Now, we do that less because we're not necessarily locally able to put 100 million on the table. But in a way, that's a very good thing because capabilities have a price. And the fact that you're thinking whether in Côte d'Ivoire, only talking about it, or in Cameroon, you need the same risk for the same multinational enterprise of $100 million, and you'll realize that, no, it's only 20, 30, 40. Well, that way, we can really meet our customers' expectations. We can educate them also, and capabilities have a cost, so we can also reduce the cost of those programs. Maybe that was a bit quick. Sorry. The third major change, as you were highlighting, Serge, is the increase in the share capital of insurance companies. That was necessary. It was a bit surreal that to consider that once upon a time, African insurance companies had the same share capital as a big limited company in France. That was unthinkable. That's now done. It's a good thing because that way you're professionalizing the sector, you're beefing their capabilities up, and they're now more solvent. I was trained as a legal expert on claims management and settlements. It's very good to start covering damages, but then you need to know how to pay for that. And then there was a debate that maybe it should have been finer with levels of capital that would have been better suited for the countries. In Côte d'Ivoire, which is the elephant in the area, a share capital of 20 million euros would be quite decent. In Central African Republic, to talk about the laggard, even 5 million in share capital is almost unthinkable when you see the market. So what did Allianz Group do? Against that backdrop, Allianz Group decided to dispose of 5 countries, which were the smallest countries, in which indeed the capital increase risked impairing our profitability on the one hand, and above all, and it's worth pointing that out, sorry for this aside, we're talking about CIMA, but I wanted to extend the scope. The Allianz Group's completely revised its targets in Africa, of course, whilst significantly maintaining locations in the main CIMA countries, but above all, it extended to other countries. Don't forget that independently from the CIMA countries, there are 40 other countries in African insurance accounting for 86 or 87%, even more. of global cash-ins, South Africa, where we are, Morocco, where we are too, and then all English-speaking countries that are emerging. Well, they wouldn't be happy if I said that. Well, there's Ghana, there's Nigeria, Kenya, countries where we have a presence, either from scratch or by acquiring subsidiaries. So we are now asserting our presence in East Africa, and the Alliance Group, of course, wants to gear its development towards East Africa, the English-speaking parts. And to conclude, I would say that what's observed in the CEMA area is observed all around Africa, with share capital that is increased, with more stringent obligations for local insurance, and also a rise of regional reinsurance, and also goals and rules to comply with in this respect. I think I was a bit too lengthy, sorry. No, that was perfect. Thank you, Claire. So, Aude, what shall I do? Shall I give my closing comments to respond to that, or are we taking a few questions? Well, you reserved your answer regarding the question, constraint or opportunity. Maybe you can give your closing comments and respond to Claire's comments. Well, after hearing Benjamin and Claire, and also after seeing the results for the survey saying that regulatory changes in Africa in the CEMA area are rather a constraint or an opportunity, well, the results of the poll show that it's mostly an opportunity rather than a constraint. Why do 42% of people think it's a constraint? I'll explain why. They think this is a constraint because sometimes regulatory changes are deemed excessive. Why? Because they're not well understood, including by players and by the insured. If it's not understood on the continent, in the area, it's not understood. It's even less understood by international players. So there's a need for education, as Claire was saying. We need more education. And so we are here to explain and help people understand these constraints. So I'm speaking to the 40% who said that it was a constraint. These constraints, well, these changes, are sometimes feared, and they're also sometimes challenged because it's somehow an upheaval for the way we've been doing things. Quite naturally, people don't like changes, so that brings us out of our comfort zone, and sometimes it's not very pleasant because when you're working, you've got your processes and then you need to change them because there's a new text and it changed everything. You don't like that, but you have to, everybody has to and is invited to be more imaginative to adapt, as Claire was saying a minute ago. And from the moment that you're able to find alternative solutions that are both compliant and here to satisfy international partners, well, then you'll realize that changes are opportunities. And also, when you're imaginative, inventive, creative, you're going to be able to put in place, and that's very important for the support for international programs. This is where you have to show all these abilities to be creative so that you can adapt to regulatory changes in the CEMA area, but also to the needs of your international partners. That's major. In order to be able to adapt, you need this mindset, they need this way of thinking. And that's also an opportunity because of the presence, as everybody said, in the CEMA area of all sizes of players. And that's what you're observing more and more, and that's very much encouraged. In the CEMA area, you have international, regional, sub-regional, or even national players, and the liaison offices are here to create groups, strong and robust groups that are able to adapt to changes and that are still able to meet their customers' wishes. And you're building groups that can offer players diverse solutions with the right level of financial responsiveness. What is held against the region is a lack of responsiveness, but I think that market changes are going to force players to be more proactive and responsive. That's what you're already seeing, so you'll see more and more of that. And also, you should think that it's an opportunity because in the area, there are still many sectors of business that remain to be developed, starting with the transported cargo. This is the transport insurance meeting. Their cargoes are still in the CEMA area, so there's a lot to do. Aviation, mines, energy, that's a whole other field. So you can see the CEMA area as more than a set of constraints, but as a land of opportunity. Thank you for your conclusion. One question from the audience. Statistical results for wholesale cargoes are not great, according to Ayumi figures. What is CEMA's secret to grow this business without jeopardizing French insured parties? Well, objectively, there are two solutions. The first thing is that in a number of countries, we have minimum statutory insurance rates. Well, our European friends scream because of that, because very often the minimum rates that we have are higher for reduced guarantee, the rates that we sell in Europe for bigger guarantees and full guarantees. But anyway, that's a major element. So we have a premium volume which is much bigger, which is not much bigger, but bigger to begin with. And I'll also add to that by saying that the market is not so impacted because players in the CEMA area are issuers of insurance certificates. They're not involved as pairing agents on programs, and very seldom are they co-insurers on international programs, so the market is less impacted. The market will be more impacted when there are more insurance companies in Africa that will be part of as co-insurers in transported cargo programs. And we can see that for big projects, and there are more and more of that very often. African transport was for commodities and staples or equipment goods. Now there are all the mining projects, to name but a few. There's construction. Africa's constantly undergoing works. It's like the streets of Paris. And so the basic guarantee that was delivered for a very long time, and that was the biggest foundation of the portfolio of local companies, has begun changing because African insurance companies are now growing. They're becoming more professional and mature, and they insure 100%. I know that the programs that I'm working on a daily basis now, increasingly I'm asked for full guarantees, all risks, including war risk, which is big. It's not the topic today, but it does matter. And so we are faced with clients that have international lenders that demand that the insurance companies delivers all risk guarantee with all the necessary covers. So that is going to increase the premium, but also the claims ratio, which is a good thing for us. Well, not much to add to that. Already now we can see companies becoming more professional in terms of co-insurance, so that they can price at the right price, and they can also manage claims like any other company. So now and tomorrow, what's going to happen in the CEMA area? Thank you very much. It's 12 a.m. exactly in Paris. This is the end of this discussion. Thank you to Benjamin Roubaud-Rimbaud, and we'll be back here at 2 p.m. Paris time for a discussion on pricing.